Oh, good afternoon, everyone. My name is Michael Burke, and welcome to TradeStation's Live on the Web event series. This is a brand new series called Strategy Trading, and during the next few sessions of this series, we'll be talking about the technology of strategy trading and backtesting and automation. So this is a great new series to really focus in on some of the core technology that makes TradeStation so unique. Our session today is looking at the Walk Forward Optimizer, and will be taught by Dr. John Clayburg. John Clayburg is a longtime friend and developer, client of TradeStation. He is just an outstanding resource of information for strategy backtesting and technical analysis, and he'll tell you more about himself, I'm sure, as the presentation progresses. I've noticed that we have quite a few attendees here today. We're going to have about 300 in attendance, and I can see from the IP map that almost every continent is representative, except Antarctica. We never have anyone from Antarctica. I'm not sure why. But wherever you're from, whatever time of day it is, welcome, and thank you for joining us here today. I think you'll really enjoy it. Let me get some housekeeping out of the way, and we will get John started right away. The following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructor are for demonstration purposes and not recommendations. Active trading is not suitable for everyone. Please be sure to read the disclosure information in the PDF handout available in the Documents folder. I'm also going to pump that into the chat now, so you can take a look at that. Also, you can also read additional disclosure information on the TradeStation website. John, I'm going to turn it over to you, and this is evaluating an automated strategy using the Walk Forward Optimizer. John?
Thank you, Michael. Let me do a quick sound check here. Can you guys all hear me okay? All right, very good, thank you. Well, as Mike mentioned, I've worked with TradeStation for around 25 years. I first started programming in way back when we used to call it Strategy Writer. So if that tells you anything, if any of you guys go back that far. I've been doing this for around 25 years and found TradeStation to be the absolute ultimate to work with. There are a lot of other products on the market right now. TradeStation remains the #1 platform, and found it very easy to use. My background is as a veterinarian. I graduated from Iowa State University in 1971 as a doctor of veterinary medicine. I practiced in my hometown of Coon Rapids in western Iowa in the United States. We're about halfway between Des Moines and Omaha, about 30 miles north of Interstate 80, for those of you who may have been out here. In 1985, when interest rates went to 21%, all the livestock left the country and went to town, and my practice went to town with it. And shortly after that, my partner, who was just retired a couple years ago, he and I decided that one guy could stand and look out the window as easy as two, because that's about all there was left to do. And my wife Karen and I decided to raise our 4 boys and our girl on our family farm here. And in the process of that operation, we had to market cattle, livestock, corn, soybeans, and so forth. Got interested in markets, got charts, got interested in technical analysis, got a computer, got TradeStation. I had a guy program a strategy for me, and I looked at that and said, that doesn't look too terrible, awful bad. So I got to messing with TradeStation and messing with easy language and taught myself easy language. I've never had a programming course in my life. That should tell you a little bit about how easy language really is to use if you want to apply yourself to it. If you guys want to learn this stuff, just start with it. I'll be glad to help you out, but it's not that tough to do. But anyway, that's my pedigree, and that's my 50-cent pedigree for what it's worth. Since that I've been doing a lot of seminars around the country. I've done seminars in Europe, all over the United States. I've got one coming up in New Zealand whenever we can get it scheduled. So it's been a lot of fun. I enjoy doing it and enjoy meeting you guys on the different, and I see several familiar names here. But and I enjoy meeting you guys and working with you, and And although the online thing does work out very well, so that's what we're going to do today. Well, let's get started here. We've got a lot of stuff to go over. I've got about 120 slides, 115, 120 slides, which is a lot, but some of them don't take too long to get through, thank goodness. But we're going to have, I know you guys will have questions. I'm seeing your questions to go through here. When I see a question that needs to be answered right away, I'll try to answer it when I can. Otherwise, I'll probably try to take most of the questions at the end of the seminar. So, and if I miss a question at the end of this thing, I just miss them because they roll by pretty fast. And if I miss one, I'm not ignoring you. Just don't be afraid to repeat it. So, I'm already getting the question about slides. Yeah, if you guys want to send me an email, I will be glad to send you a copy of the slides. And I'm giving you my email right here. There's my email. You can send me an email. I'll be glad to send you that. Send you those slides. Some people are talking about a delay and an echo. I'm not sure. I don't think I can do anything about that. I'm not sure if anyone at TradeStation can or not. You may have to either turn your volume down or mess with your sound reception on your end, or perhaps log out and log back in. Anyway, now sometimes it just happens. There's not a whole lot we can do about it. It's good to see several. Good to see a lot of familiar names going through here. All right, we're going to talk about TradeStation's Walk Forward Optimizer, and there's no way in the world in an hour we can cover all the salient points and all the details you're going to need to use this thing. So we're going to do our best we can here in an hour. We probably will run over a little bit because we're going to get questions, and I'd like to do as good a job as covering this superficially as I can. But we are going to offer a free one-day, full-day seminar, 9 in the morning till 3:30 in the afternoon on March 20th. And we'll have a promotional slide and a link to sign up for that thing at the end of the webinar. But we are going to take a full day and go from everything. We called it everything you always wanted to know about systems, we're afraid to ask. And we're going to take a full day to go through system development, system basics, easy language stuff, a lot more detail on using the Walk Forward Optimizer, self-optimizing strategies, optimization in general, and so forth. So you guys can certainly sign up for that, and we'll get an email to you if when that can happen. So we shouldn't have a problem at all getting that information to you and getting you to sign up for that. So if you're going to you can get the slides if you send me an email. Obviously, be sure and take notes, but we will be covering a lot more stuff and a lot more detail in about 3 weeks. So anyway, with that out of the way, let's get with the program here. I am a commodity trading advisor. We are going to be doing some CTA stuff in the future if you want to take advantage of that. But one thing we are required to do, and not only are we required, I think it's just a good idea to tell you guys that the numbers you're going to see here have come from hypothetical backtesting. A lot of these trades have been taken, a lot of them have not. Most of them have not. Consider for the purposes of this presentation that all these numbers that you're going to see are the result of hypothetical backtesting with the obvious result of 20/20 hindsight and all that kind of stuff. Now, I would do this even if we weren't required to, simply to clear the air and make sure you guys understand this. I would rather have you guys log off right now and nobody listen to this than have anybody get out of here with any unrealistic expectations of what this thing will do. So the numbers are all probability oriented and from hypothetical numbers, just so you understand that. Also, this presentation is protected by the United States and international copyright laws, but you are free and absolutely, totally encouraged to use any of this information for your own personal use. One thing we don't appreciate is having you record it and sell it to somebody or something like that. We've had a few guys do that, and they've been to court and we've collected. So anyway, to keep that, just to keep all the housekeeping stuff out of the way here, we're just keep that in mind. Strategy optimization. Start with a complete definition, and we're going to start from the ground up here and build into a presentation. we don't want to leave anybody in the dust. Now, a lot of you guys have done optimization or are familiar with this, but we're going to give you a full course on optimization from the ground up. Optimization is the process of testing a range of values used for inputs with the purpose of fine-tuning a trading strategy. Any automated strategy you put up has inputs that the user can define and therefore change how the system looks. What the optimizer does in very simple language, looks at all those combinations and tells you which one or ones are working the best at that time. So that's all that optimization really is. Now, this is generic optimization. We're going to talk some more of this stuff. But the optimization, when it's used properly, can be a very valuable tool for both the development and fine-tuning of an automated trading strategy. It's absolutely essential, in my opinion, for not only the testing and construction of any operating strategy, but also keeping the strategy in sync with the current markets. If you use it properly, it can do you a lot of good. Optimization, when used improperly, will result in a trading strategy that has little, if any, chance to be profitable in real time. Optimization can be your best friend. It can be your worst enemy, depending on how you use it. A lot like anything in life, that's the way it is. But we're going to try to show you a brand new deal here that will make this a lot more useful for you. So there's a definition of what we call generic optimization. To evaluate a strategy, we need to use optimization to get your strategy in sync with the current markets. And Mike's going to cover this, and I'm going to be interested in hearing your presentation, Mike, because there's quite a lot of numbers in a strategy report that you need to understand. And one of them is a performance graph, as you see here. Now you'll notice that there's a performance graph here that hits a peak and tails off and so on, and kind of goes sideways for a while. This is just one of the things you have to use to evaluate how your strategy is. You'll get all kinds of reports of an optimization. But the point is that this is the kind of a strategy we're working with. I'm using one of my own strategies called Universal here. This happens to be on a soybean meal chart. We're going to be using this chart quite a ways through here. So most of you have probably seen this kind of thing. But if you don't re-optimize properly, if you try to curve fit it too tightly, you'll get something that looks like this. This chart was re-optimized December 2nd, 2011, and the trading goes on through January 17th for about 6 weeks worth of trading. So you can see we started the chart down here at July 8th. We re-optimized on December 12th, basically to give some information for this webinar, but just as a general rule, we do this once in a while. And then we let it trade using those optimization numbers until January 17th, and you can see what happened here. This is a typical equity curve example of an over-curve fitted optimization. And I did intentionally over-curve fit this one so I could show you what this actually looks like. A lot of people like to take an optimization and keep running it and keep running it and keep coming up with new variables and keep coming up with new approaches until they get the absolute maximum profit out of that thing. If they can barely squeeze out of it, they may optimize 30 times to do that. That almost guarantees you that the strategy will not work in the future. There's another slide I didn't use this time, but I like to tell people that technical analysis is basically an attempt to quantify and program human behavior. All trading comes from human behavior. I don't care if they program the computer, if they're standing in the pit, they're standing on the floor of the stock exchange, they're pushing the button, they're picking up a phone, calling the broker. I don't care how it happens. All trading is a result of human behavior and therefore human emotion, and therefore very difficult to quantify. We're trying to put a subjective evaluation. We're trying to put a technical evaluation on a subjective property, and it's hard to do. I've got a nephew who's a psychiatrist. If you can ever figure out a way to mathematically predict human behavior, for heaven's sake, tell me, and I'll be the greatest psychiatrist in the world. We're just trying to look at probabilities, and the more tightly you curve fit data to a system, and when you can continue to over-optimize, that's what's going to happen. When you do that, you are creating a strategy that expects, in effect, the market to perform exactly in the future as it has over the test data. And whenever you do that, it's not going to work for you. You can absolutely cut your own throat with a heavy optimization. And this is one thing that the walk-forward optimizer has gone a long way toward preventing. We've come up with a lot of other things to do that. Several of you may have seen my video on selective optimization, where we don't take the best optimization. We try to take one that's kind of hanging out in the pack. Well, the walk-forward optimizer kind of does that. There's a lot of different ways to look at selective optimization, and this is just one of them. And I tell you, none of them work anything close to this thing. I've just been blown away since I've been working on this. But just keep in mind that optimization can be your best friend, it can be your worst enemy. Typical optimization, you optimize select the strategy inputs and use the most profitable combination. Not necessarily always the most profitable, the most practical. But that's just an idea, and remember that you can overdo it very easily. Very quickly, just to familiarize those of you who may not be familiar with optimization, the optimization routine, click on Format at the top of any chart. Click on Format in Strategies, you see here highlighted. Click on Strategies. From that, Strategy Input, Formats, Analysis Techniques, and Strategies, click on Format, and then select the variable that you want to optimize and click on the Optimize key. And a lot of you have probably done this as I suggested. And this one there, nope. Optimization will test all combinations of the system variables and will track the result of each combination, and you will get a detailed data report back, and then we're going to use that data to drive the walk-forward optimizer. See, we've chosen one variable. The B1, S1, B2, S2 inputs do govern the entry of the system that I'm working with. And I'm going to optimize these values between 5 and 25 with increments of 1 all the way through. You just set these up. Once you click on that Optimize key, you can set the range of variables. You can test each variable over a reasonable data range. And you can test these in any combination. If you want to do this in less time, actually I've optimized all 4 of those together. I've optimized one at a time. And actually doing them one at a time is a lot quicker and almost as accurate. So if you want to run a quick and dirty optimization in the old-fashioned way, you can do that. However, with the walk-forward optimizer, it's necessary to do them all in one altogether. So here I've selected all of these. I'm doing them all 5 to 25 by 1. When I get done there, we're going to go ahead and click on the Optimize button. Click OK here. Click Optimize here, and you're going to be presented with a screen like this, which is a walk forward or generic, depending on, they'll look the same way. This is an optimization in progress. You can see here this has taken 12 hours and 55 minutes so far, and it's going to take another 8 hours to do it. We're going to run 480 iterations. We're going to run 96 trials in each one. This happens to be a genetic optimization. So far, our net profit's 48,000 on these inputs that have run so far. Don't get too alarmed about the number of time it's going to take. I'll show you how to I'll cut that down to some degree a little bit later. At the end of your optimization run, you will receive a TradeStation strategy optimization report that's absolutely loaded with numbers. You're probably only seeing 10% of the data that you can see here because there's a number of fields all the way across the top, and I've got this set up to keep the top 200 tests. And you can see here we're only seeing 29 of them. But you can sort this for all net profit, and you have a test number, you have the variables out here that we were testing, and these are the optimal variables that you need to use if you want to use the best optimization. If you double click this number out here, you will get this set into your strategy. It's not always the best thing to do. See how much higher this is, 113,000, 107. I would pick one of these at 103 or 104, but we don't have to do that anymore. The walk forward optimizer takes care of that for you. But this is the optimizations you'll come up with at the end of that. Well, now what? What are we going to do now? Well, we need this is where the walk forward optimizer takes over, because at this point previously it was up to us to look these over and say, well, I guess this one looks pretty good. Let's try it and see what happens. Well, you can do that, but you may not like the results. We want to answer 3 questions here. Is the strategy robust? Is it going to continue to follow through? Is it going to be susceptible to radical market changes? Is it going to be profitable in the future? That's what we're looking for. When should I re-optimize? How do I decide when is the strategy not performing as well as it should, and is it profitable to do another optimization, or you just write it out? That's kind of was always kind of up in the air before. What input parameters offer the highest probability of success? That's probably the ultimate thing we want to find out. Now, always before, it was kind of tough to do that. Always evaluate on out-of-sample data. This is something we call walk-forward optimization. It's also called walk-forward optimization, or WFO for short. And we'll use WFO from now on just as a shortcut. And that's going to be the basis of the rest of the discussion here. Now, we owe some credits. I did not develop any of this. I want to make it crystal clear. I'm just explaining how to use these things. Credits, absolutely, the credit goes to Mr. Robert Pardo, who wrote a book, Evaluation and Optimization of Trading Strategy, published by Wiley Trading. I would strongly suggest any of you are interested in all the details of walk-forward optimization and strategy development to get a copy of that book. It's very excellent. I have the new, I didn't get the first version, I've got the second release. I'm not sure when that was published, but I've got the second release here, and it's terrific book. But the credit really goes to a guy named Wouter Oosthuizen. And Wouter, I know I butchered your name. You're probably listening here, but sorry about that. Wouter's a very intelligent, very personable gentleman, born and raised in South Africa. He used to, this was formerly known as the Grail Optimizer, that he marketed himself, and for a while a private company had it. TradeStation has acquired it, and they have integrated it within the TradeStation construction, the TradeStation strategy. And I think it is going to, it already has for me, it's going to revolutionize strategy trading from this point forward. And like I said, I'm not going to be able to go through all the details today, because I've still got details. I learned with this thing every day. I started working with this back in September in anticipation of doing this webinar today. And believe me, this gentleman deserves all the credit anybody can pile on for a tremendous job of coming up with something. And he's still working on it. He works for TradeStation. He's down in the plantation now. So we're going to get a lot more out of this as time goes by. Briefly, I've taught people how to walk forward optimize the old-fashioned way for about 7, 8 years now. I'm just going to go quickly through it and show you how I taught previously how to do this, so you can get an idea of what this program can do for you. Manual walk forward optimization. First thing you do is optimize. You optimize on historical data first. Then you walk it forward. Now this is the slide I first taught this from, so you can see when I started doing this. We tested on data 1/1/2007 through 4/1/2007, and then we applied the resulting system data to 4/2/07 through the present. I think the present was done in like June or July of that year. So effectively, we're testing on in-sample data, and then we're applying those results to an out-of-sample data to simulate real-time trading to some degree. In walk-forward out-of-sample system testing is an effective method to test new settings in a near real-time simulation. Effectively, you're taking a chunk of data, you're optimizing it, and you're throwing that data out, and you're walking those forward. You're walking those variables forward to the next chunk of data, seeing how it does, re-optimizing, do it again, re-optimizing, do it again, and so forth. So effectively, I've done a few graphics here just to kind of show you graphically how this has to work. Now you're gonna separate a given amount of data up in a number of different runs just to make sure you've got some consistency going through here, so you can separate out the data across many time frames and see where you're going to wind up with this thing. Now this is run number 1. We're just going to take in this instance, in this graphic, a random amount of data that we're going to do our first run on. So we call this our first run. We're going to split this into 70% and 30%. Or you can, any combination you want. I'd like 70-30, you can use 80-20, you can use any number you want here. 70-30 seems to be the default, and that's what I've been looking for. And all a run is we're just going to run the data on this first group, this first amount of data. We're going to optimize the first 70%, and we're going to test it on the next 30%. So effectively, we're going to optimize on the dark purple, the dark red data, and we're going to test it on the burnt orange data here. We're going to run our optimization on the first 70% of the data. Then we're going to move the whole strategy forward, use the optimization results from the out-of-sample data, from the in-sample data of 70%, and perform it on the out-of-sample data, which is the next 30%. This is the in-sample data. This is the out-of-sample data, and you'll see this referred to, this will be referred to as OOS, or out-of-sample data, from this point forward. The results from each optimization and forward testing test are then recorded after each run and used for analysis later. So let's see how this looks. Now, then when we get to this point, we just continue to repeat this process. Here was run number 1, and here's run number 2. Note that run number 2 begins with the start of test data from run number 1. So we're always going to test on all the data. We're going to optimize in the first 70%, roll it forward 30%. For our 30% starter, we're going to have another 70% data. Then we're going to optimize that, run on the next 30%, and so forth. We're going to keep doing that. That's run number 2. That's what number 2 is going to look like. There's run number 3. There's run number 4. Run number 5, and I bet everybody can guess the next one's going to be number 6. There's run number 6. And this is just an illustration of the frequency. Now, typically the optimizer will break this up into 10 runs initially. It can run anywhere from 10 to 30 runs on your selected data. Manual walk forward optimization, as you can see, if you try to do this all manually, it is a real headache. You can do it. Very time consuming, very subject to error, because it takes a long time to do it, and you've got to record the proper data. It's subject to calculation errors. Interpretation of generated data is complicated and very time consuming, and not near as thorough as we're going to be able to do it. And therefore your analysis results is limited to what you can handle here. So I see a question on rolling versus anchored. We're not even going to get to that today, Mark. I'm sorry, but that's one of the things that we're going to have to reserve for the full day coming up later. So, but walk forward optimizer, in my opinion, come on slides, what's going on here? This is the ultimate tool for strategy optimization evaluation, and it's getting better. We just got an update to today. It's got the Monte Carlo thing in it. We're not going to have time to go through that today either. But if you can't tell, I get pretty excited about this thing. Sometimes I get to talking too fast, so get after it if I do that. But we've got a lot to cover here today. Let's look at this in a little more detail. A WFO process. Be sure to understand that the TradeStation Walk Forward Optimizer is not a standalone optimization utility. You have to first, it's rather an advanced utility to evaluate previously performed optimizations. In other words, you have to use the TradeStation Optimizer to generate specific data, and then use the Walk Forward Optimizer to analyze that data. Be sure you understand that, because that's just the way it works. And when I first saw this thing, I was, oh gosh, where do you put in the variables? Save you a little bit of time there. First, necessary to run a specifically designed optimization in TradeStation, and save the results in a specified format in a designated folder. Saved optimization data is then opened, processed, and evaluated using the TradeStation Walk Forward Optimizer. Just so you understand, this is just used to evaluate TradeStation optimized data. Just another brief setup on how to set up the Walk Forward Optimizer. If you look at the drop-down menu here, you can click this down arrow. You can select Standard or Walk Forward. You must select Walk Forward Optimization, or you will not be able to use it in the Walk Forward analysis later. You can also select between Exhaustive and Genetic. If you select the Exhaustive, you're going to run a lot more tests than if you select Genetic. A lot of times that will depend a lot on how much data you have, how long it's going to take, and a lot of different things that we'll go into in more detail on the 20th. But the test count there, you're going to run 194,000 tests. And I like to test against at least 6 months or a year's worth of data if I can do it. So it takes a long time to run this stuff out. Under the genetic optimization result selection, you're gonna look at 10,000 results, 10,000 tests. You must have 1,000 tests before this is going to work for you. And you'll get an error message that when you run the walk forward optimizer that you don't have enough data here. Consider redoing it, or at least when you evaluate the results, consider that you haven't, you may not have enough data for a thorough analysis. But if we click Advanced Settings, now you don't have to use the Water pointed this out to me. If you click Advanced Settings, if you want a lot more tests and if you want to do a lot more with it, you can use Advanced Settings. You don't have to. As long as you got the 10,000 tests run, you don't need to do this. Now I will typically use the Advanced Settings because I want to be a little more thorough in what I'm doing. But granted, it's going to take a lot longer, but it's there. So if we click on the Advanced Settings, this screen comes up. And notice that we have an exhaustive method set up here. And with the exhaustive setup, we're only going to see these choices. We can set our out of sample window, exclude the first X% and the last 30% of the data. That's where you get the default of testing on 70% and of doing your optimization on 70%, then walking the forward to 30%. Or you can set up a date range. Typically, I've been using all the defaults here, so it's this is just the way it works with an exhaustive test. Now, if you want to set this up as a genetic walk forward, and then click on the Advanced Settings, then you can get these boxes become available. And you can set the number of generations, the population size, stress tests, and all this kind of stuff. Again, we don't have time to cover that. That's going to be done on March 20th. Genetic option enables selection of the genetic optimization parameters. Typically, I will use the suggested settings. You click on suggesting. Notice right now we've got 10,000 tests selected for the genetic walk forward optimizer. If we hit the suggest button, it's going to take us to 440 iterations with 88 population size, mutation rate of 0.1, and crossover rate of 0.9. Don't worry about that now. It's also going to set it to a stress test to 1 at 10%. Don't worry about that either. We'll cover that later. We'll cover that later this month. But notice, instead of having 10,000 tests, now we're going to have, come on, Bertha. We're going to have 38,720 tests. That results in, note the changes in the genetic optimization tests and the number of tests coming forward. This is all the setup before we do anything. If you want to, and I always do this just because I'll show you why a little bit later, but there's a box down here that says terminate optimization if population did not improve for X number of generations. I will typically use that and set that for 15 generations. That means after you run 15 generations, the result, understand, you're set up to run 440. If you run 15 and do not have any improved results, then it'll terminate the optimization and give you the results for you. And I'll show you why that's kind of important here later. And even with a pretty good computer, now this is an i7 quad-core computer with 16 gig of memory, and I'll show you here what can happen to you. But and this results in a lot less time to get your optimization done. And I think it's just about as good. Now you also have to save this test. Now if you go back, you see you've got a thing down here, save the results to file. And you're going to want to do that if you're going to want to evaluate this later. It's mandatory that you save this material in the Walk Forward Optimizer folder within TradeStation. You have within TradeStation, Program Files, TradeStation 9.1, WFO, you have a WFO file. If you don't file it in there, this may be a bug they want to fix someday. But right now, the only place the Walk Forward Optimizer can find data is in the WFO folder. So be sure and save it there. And be sure and give your Walk Forward a test name so you can find it later, because you're going to do a lot of these. Typically what I do, this happened to be a Japanese Gen 1000 share bar test. I did this on 2/2012. I always put a date on that so it makes it easier to find this stuff after you've got 30 or 40 of them laying around. It makes it easier to find it if you just have some kind of a numbering convention. But you can use any naming convention there you want. And then you click on the Optimize button down there and you turn it loose. Now here's why you might want to consider using this 15 generation limit. Check it's probably just going to be probably hard to see here. This thing is saying estimated time to completion, 25 days, 21 hours, after it's already been running 3 hours. And I've had them run 5-6 days on me on some of the shorter ones. And if you don't click that 15 optimization thing, you'll be sitting there for a month and waiting on that. Most computers are priced by that time. So you're going to want to be a little bit reasonable. Obviously, the more tests you can generate, the more accurate your data is going to be. But my experimentation has shown me that 15 limit thing has worked out pretty well. The only time it doesn't work out is when it kicks out real quick. You may not get your 1,000 tests you need. But that's why we do that. And this is the same thing we looked at before. You again will be faced with an walk forward optimization result. Up here you're going to see something that says walk forward WFO suitability. This says low or not. This isn't the slide I wanted to have here. But this either says low or not applicable. But you'll get a hint right away if this thing's going to work. If this thing comes up and says walk forward suitability low, forget it. Stop right there. You're screwed. It's not going to work. Start over. Trust me. Beyond that, here's the walk forward optimizer when you open it up. You click on this file, either file open or click on the folder up here. You can open your saved walk forward files. Your files will open up down here and you can select these, but if you don't save in that walk forward folder, you're not going to find them. I had a guy, and he may be in here, but I had a guy who couldn't find these files, and because I had the same problem. If you don't keep them in that designated folder, you're not going to find it. And that's one suggestion I might have. Might make it a little simpler for users, but it's not necessary. As long as you save in that folder, you're good. Next step, you're going to want to start a single walk forward analysis or a cluster analysis. I'll explain the difference of those. And at this point, your symbol and the name of your strategy will show up right here. So you can make sure you got the right one at that point. But here we've just selected a single optimization, single walk forward optimization. First thing you'll see is an overall result of what your walk forward optimizers come up after running your optimization data. Overall result says pass down here. Instant analysis, this is probability of consistent strategy performance. Several categories are checked out. Overall profitability has to be greater than 0. Duh, no brainer. Walk forward efficiency must be greater than 50%. That means that your walk forward testing must deliver at least 50% of what your optimization data showed. The first 70% will come up with a profit figure. Your walk forward, your next 30% must be at least 50% of that figure on a per trade basis, or you're going to fail. Consistency of profits. 80% in this instance, 80% of the walk forward runs are profitable. That means your walk forward, your 30% that you test your optimization on, 80% of that was profitable. Actually, the limit is 50%, but you notice here I got a couple of asterisks. If it's over 80%, then this passes with distinction on that category. Distribution of profits. No individual time period can contribute more than 50% of the total profits. You'd be surprised how often this will kick you out. But what they're saying here is you don't want an outlier. You don't want 1 2-month period over a 2-year test for generating 80% of your profits. Well, that's obviously not going to work going forward. So you have to set that up for total net profit. It can't be over 50% in any one given run. Maximum drawdown. No individual run can have more than a 40% drawdown of initial capital. So keep in mind, and you can change all these. You can come up here in the setup, and we're not going to go through that today either. But you can set up any of the categories you want over here. I've just used the defaults because I know Wilder and this guy. That's a suggestion he makes. That's probably what you're going to want to use, because this guy has forgotten more about system testing than the rest of us will probably ever know. Well, I'm going to use this stuff. Now, if you want to play with this a little bit, you sure can. You can make it easier, or you can make it tougher. But this is the first screen that you're going to see. You're also going to see if you look up here, you've got in sample data. Is your optimization sampled in sample data? This will give you all the 10 runs that we ran, give you the time period over which they ran, number of days, number of bars, net profit, max drawdown, drawdown percent, number of trades, percent profitable, average winning trade, and a lot more if you want to go look at it. You can see the sliders curl over here. There's a lot more. It will recommend the parameters that you use on this strategy right down here. It will also suggest that you re-optimize in 13 days to continue this happening. Well, I asked Water about this on the phone one day. Does that mean the next 13 days you go ahead and run two more years of data and do all this stuff? He said, no. What you do is go out, put 13 days of data on your chart, run the optimizer, and there are your variables that you're going to use for the next 13 days, because what that effectively is simulating another walk forward set, another walk forward run. So you can re-optimize in 13 days. Recommended re-optimization interval. You can look at a walk forward efficiency. This is a walk forward summary. This happens to be the walk forward summary data. We looked at the optimization summary. Now we're looking at the walk forward data. The walk forward efficiency in this case was 67%. Meaning 67%, you should be able to get 67% of the profit out of the test data that you got out of the test data. You should be able to get out of the walk forward sample. You get a performance summary, very similar to the one in TradeStation, when you look at total net profit and so on. A lot of these are very similar to what you see in an optimization report. This is a trade-by-trade summary, exactly like you see, and this is for the selected walk-forward test that you just ran. You'll get a graph here. The yellow is the actual underlying chart of the underlying commodity we tested, or the stock. The yellow line, the green line here is your equity curve for your optimization. Your WFO summary graph. You get something very interesting called a distribution analysis. This is telling us by the entry day when we had our greatest average profitable trade. And you can use these pretty effectively to alter some of your strategies. Now this is fairly common. This is fairly straightforward here. Monday and Thursday were pretty good. Tuesday and Wednesday were somewhat behind. Tuesday was the worst one. This happens to be on another test, but the one we were actually looking at here previously, and this is an eye-opener, check out Tuesday. Does that tell you anything? Maybe we don't trade this on Tuesday. Maybe we should rewrite our strategy to not trade on day of week number 2, which is Tuesday. Okay. I mean, the stuff you get into from this point on, it's pretty crazy. Let's dig into this a little further. We can use this to suggest strategy rule changes and/or additions. I don't know why I had 2 of those. You can check a number of different items on the distribution analysis. We can look at the way that you're looking at this data, number of bars in the market, entry date stamp, entry time stamp, exit date, exit time. We're going to look here at entry date and the average profit distribution and see that Tuesday is a bummer. Okay. We can also look at average profit distribution. We can look at percentage profit distribution, win-loss ratio, average trade, average number of trades. Any of those combinations you can work. You can see you can get wrapped up in a lot of data pretty quick, and I haven't shown you anything. So now we're going to get down. We're going to look at entry timestamp for average profit distribution, and we're going to notice that anywhere between 4 a.m. and 6 a.m. to start this strategy is the best time to work on this. And this happens to be the euro currency. It's on a 10-minute chart, and it's I think I used a year's worth of data, and the testing time begins at 2 a.m. till 2 p.m. in the afternoon. So this runs 12 hours on my test data. Now I may go back and change this to start trading at 4 a.m. to 6 a.m. because we're not really getting a whole lot done here between 2 a.m. and 3 a.m. Looks like the meet's happening right here at 2 a.m. at 4 a.m. to 6 a.m. So if we look at win-loss ratio distribution, we're kind of seeing the same thing. It's a little bit of a different analysis, but that's two different items we're looking at here, and we're going to say, hey, look, this looks pretty good between 4 and 7 o'clock. So we can check, we can test it there. We can look at the exit timestamp. We can see that 1 p.m. and 2 p.m. is certainly the best time to exit. So if we can run those trades all day, we're going to have more profit. Same way on the win-loss distribution. That can tell us that we can use the 12 p.m. to 2 p.m. exit is probably the best way to run on this. So it's just an amazing amount of stuff you can crank out. You can run a cluster analysis, or you can run a single walk forward. This is what you get when you look at the cluster analysis. We're running anywhere from out of sample runs, 10 to 30 different runs. That example we showed you showed 6 runs. This will run anywhere from 10 to 30, and it'll run 5 to 30% out of sample data. And I know I'm going quick here, but we're going to cover the rest of this on the 20th. Take time for all the questions. Although we're looking for a strategy setup that's robust, it's perhaps more important to discover the strategies that are not likely to work well. Believe me, I've had several guys using this, so you won't believe how much trouble this has gotten me out of last month. Okay. Now here's one that looked really good on the surface, but fell apart totally, both on the WFO and in real time. Here's a strategy. This is a soybean meal 89 tick bar on my universal system. And there's just a chart just to give you an idea of what it looks like. This trades the soybean meal chart from 9:30 in the morning to 1:15 in the afternoon, Chicago Board of Trade. Here's the TradeStation optimization report. WFO suitability, very low. You see very low on one of these things, pull the plug, start over. You're screwed. It's not going to work, believe me. I've done enough of them. But to run this on through to show you why I can tell you that, here's what we come up with. There is the chart. There's the performance graph prior to testing. I ran a walk forward optimizing test. I did a cluster analysis. I chose the most profitable one here in the center of the cluster, and we'll go over that on the 20th to explain what that's all about. If I look at the walk forward efficiency, I find that all of these are in the red. We have to be above 50% to make this work. Not a doggone one of these is above 50% walk forward efficiency. That's why they all failed. This one failed due to a walk forward efficiency being under 50%. You go back to the walk forward overall result for all of these. Let's see, there's 3, 5, 1, 2, 3, 4, 5, 6. There's 30 tests here. Every doggone one of them failed. Okay. Now remember that walk forward, that strategy curve looked pretty good, and that strategy optimization report looked pretty good. I would have traded that a year ago without even thinking about it. Now I got my hand headed to me. Here's the forward testing. There's nothing like forward testing. You can back test till the cows come home, but you're not gonna know what you've really got until you forward test it, either with real money or on a simulator, preferably with real money. I didn't test this with real money because I could see it wasn't going to work, but I did forward test it, and here's what happened. Nothing like nothing acid test is real time. All right, re-optimized this, did this optimization on the 20th. This is the same chart we looked at earlier when I was talking about an overcurve fitted strategy. When we look at this thing, we did the optimization on 1202 and ran it through 117. Look what happened. Walk forward said it wasn't going to work, and guess what? Down the tubes. Again, the same chart we looked at earlier. Typical equity curve example of an overcurve fitted optimization. The only difference is here that the WFO optimizer waved a really big red flag right in front of your ball and said, hey, don't trade this. Cannot believe how many times I've had this thing keep me out of trouble. It's incredible. What if a cluster analysis shows mixed results? I asked Roger about this one. He says, how do you really decide which set of variables to use? Because you do a cluster, you got six of these, you got 30 of these tests, and within each one of those, you've got about probably 8 or 10 different sets of combinations of your variables. Which ones are you going to use? I asked him about that. And he kind of went back to the same thing that I've been talking about, that trading is as much of an art as it is a science. And at this point, you've got to use your own trading style. You've got to use some of your intuitive ability as a trader. You got to use some of your example that some of the experience you've had trading and so forth to get a feel for how things work here. So you can see here we only had 2 of these pass. This is that same one we just looked at. This is that soybean meal thing we looked at that failed so bad. Well, this is actually a euro, but it doesn't matter. We still had 2 of these. This happens to be a euro dollar cross, 240-minute chart that failed miserably. Only 2 of 30 tests passed here. And that's a no-brainer, okay? This sucker's not going to happen. We're not going to trust it. This is not robust. It's a no-brainer. Forget it. Go away. You've also probably got a not applicable or a very low on the first test. So you only got two of these passed. Hello. If you only get 2 of these that passed, then that's a no-brainer. Let's look at another one. Here's one that we ran the Australian dollar, a 250 tick chart, 11.29.11. 27 of 30 tests pass. You don't necessarily have to have them all pass, okay? You don't have to have them all pass. 27 of the 30 passed. Let's take a look at the 3 that failed, okay? We're going to select, you can click on the walk forward optimizing section here that says failed. Let's check the parameters on these failed tests. We can look here that on this particular test, the walk forward efficiency failed because the walk forward efficiency was under 50%. However, the current consistency of profits passed with distinction. The rest of these passed. The only thing that happened here is we got knocked out because our walk forward efficiency failed to get to 50%. So let's look at the walk forward efficiency applied to all of these clusters, and notice that the one we're looking at here is 49.1%. The other 2 that failed, 48.1 and 49.3. Result being that the 3 failed tests, in quotes, were less than, that arrow goes the wrong way. Those 3 failed tests were less than 2% below the 50% passing threshold. And that 2% variance in those 3 tests out of 30 were what failed the test on those examples. So with this in mind, we're going to ignore those 3 tests and regard this system as usable. At least I'm going to. You guys might want to do something different. We can also look at the percentage of on the same test. We can look at the consistency of profits or the number or the percent of the runs that were profitable. And we can see out here that 85, 64, and 76% consistency of profits on those 3 tests that failed. The failed tests, the so-called failed tests, were 75% efficient. I will trade that. I will trade that. See, a lot of questions go through here. Again, we're going to cover a lot of this stuff on. We're going to have a follow-up webinar for a full day on March 20th and cover all this. Mark asked, can I send optimized strategy code? I am going to provide a service to do this for you guys if you want to do it. There's a lot to know, and I'll teach you all about it. But if you want to send me an email, I'll be glad to do that for you. It'll be a fee-based deal, but we will do that. Let me give you my email address here again. And if any of you would like a copy of a PDF of this thing, I'd be glad to send it to you. And TradeStation is going to provide a recording of this thing as well. And we are going to run over, so if anybody needs to get some coffee or get rid of some, now would be a good time. I always, one of my biggest faults doing these things, I always prepare too much stuff. Another reason to ignore these failures is that we've got these 3 down here are actually better off than some of them that pass. So just because you have 2 or 3 pass, you want to dig into it a little bit and see why they fail and see how that compares to the others. That's where it becomes kind of as much of an art as it is a science. I've got a slide up here. Remember that trading is as much of an art as it is a science. This is a cluster analysis, and just to make, I guess I'm closer to the end of this, and I thought we are going to make it. How about that? I'm talking too fast. Here is the Australian dollar, the same data we were looking at here on those tests that had the 3 that failed, and the rest of them passed. We went ahead and ran this, and I actually traded this one. because I wasn't afraid to trade it. But we look at when we did our walk forward optimization on 11/29/11, we started the testing on 8/2/11, and we ran it through we ran the optimization at 11/29. Our out of sample data, this is data that was real time. And I started trading this thing on about the 1st of December. I'm still trading it, by the way. Today I did, I lost $180 today. All right. Anyhow, there's the out of sample testing. So it is as much of as much of a art as it is a science. And now the next thing that we're going to cover in great detail on the 20th of February. I don't know how many of you have seen some of the stuff that I've been doing in TradeStation. I first presented this routine in Las Vegas in 1998 at, I think, the first or second TradeStation World Convention. This is a routine that I've come up with that actually creates self-optimizing strategies using easy language within TradeStation. I've written code into TradeStation strategies that actually goes out every so often and re-optimizes the code on its own and then switches to the best result for that period of time. It's kind of like riding a horse in a horse race. If you want to win the race, the easiest way to do it is keep jumping on the front horse. What this routine does is monitor a number of trading systems, a number of trading system variables, a number of combinations of trading system variables in real time, and monitor which set of combinations are running best at this time. And then it will select the prime set of variables, switch over in real time, and essentially have you jumping on the lead horse with every time that horse takes the lead. So what I'm done with this thing, I've taken this, I rolled this walk forward optimization routine, walk forward testing into the self-optimizing strategy. And what I've done is set up my self-optimizing strategy to select from the series of walk-forward optimization suggested variables set into the inputs for the strategy written as a function. And I'm letting the automated strategy, the self-optimizing strategy, select from a series of suggestions made by the walk-forward optimizer. So rather than selecting one walk-forward optimization routine, I've selected them all, and I've let this self-optimizing routine choose from that the best one that works in real time. And that sounds like an awful lot of stuff, and it is, because I've been working on it for 10 years, 12 years. But 14 years, sorry. But that's another thing we're going to discuss on the 30th. So essentially what you do for a self-optimizing strategy, you have to program the strategy as a function, energy strategy input combination as suggested by the walk-forward analysis, and the self-adaptive strategy then selects the input combinations working best on the current market conditions and trade these in real time. Well, I've been doing this for some time, and trust me, it's working pretty good. And that's, I can take some of these questions. I'm trying to pick a few of them up here as we go through, but if any of you guys have any specific questions, we got a few minutes here we can cover. I'll try to answer them for you. I'll just pick these up as they come through. How often to repeat cluster analysis to get a new best optimization trade? That will tell you, Norman. When you get done with an optimization, it will suggest a re-optimization interval. I don't know how often you have to do the repeat the clusters. We really haven't run into that yet, because the stuff I've tested, I started working on this in October, and believe me, the ones that say it will work very well, and believe me, the ones that say it's not going to work, don't do it. Yeah, Terry, that's very correct. Only 6 months of tick data available. Well, I don't care if it is or not. That seems to work pretty well. I've done that, and it seems to work very well. So you don't have quite as many tests, but that's kind of what you're up against, and I think it's going to work really well. I just test the data that's available and let it go with that, so it works pretty well. Do we have target functions for the optimizer like the Grail beyond the old ones? Not sure. I'll check that out. Bring that question on the 20th. We'll try to go over that. How many generations? I typically use the default generation setup. We'll go over how to miss that. Can you test two strategies at once? No, I'm sorry, you can't. Are there any suggestions as to what is good in versus out percent? David, I've been using 70-30 because that's a default. I know in some of TradeStation's documentation, Water will suggest you use 80-20. I have not used anything but 70 and 30. And if you're going to generate that much data this way, you're going to have trouble keeping track of it. But that's something we can experiment with. Again, it winds up being a much of an art as it does a science. Believe me, trust me. Why is a cluster analysis important? Cluster will give you 30 different looks, 30 different assessments of your walk-forward optimization testing. That will give you a chance to apply your own trading style and what looks good to you, and be able to pick up a series of stuff that you know has passed to some degree the walk-forward optimization. It does throw a lot of numbers at you, and there is no set rule as to which set of optimizations that you're going to use walking forward. That's why I'm suggesting the self-optimizing strategy. Taking all those combinations, feed that through the self-optimizing strategy, let it sort out which one's working best in real time, and trade that one. Now, that sounds like, oh my God, you can never lose. Forget it. I mean, come on, there's no such thing. It does give you a few more points on the probability scale, but it's not 100%. If I sat here and say, oh, you guys are never going to have another winning trade, you never lose another losing trade, you'd all go away and you call me an idiot, and you'd be right. So it's not the total answer, but it's sure a heck of one heck of a step up from what we used to mess with. On the screen here is all my contact info too, by the way. What makes TS optimization unsuitable for what? You have to have, Keith, you have to have at least 1,000 tests. You should have. I mean, you can run them for less than that, but it's not as accurate. That's about it. Now, I saw some questions going through here. This is not available in 8.8. You have to go to 9 or 9.1. 9.1 to come out with some new upgrades about every 2 to 3 weeks. And the last thing they added was a Monte Carlo simulation, which we didn't cover tonight. Between exhaustive and generic, which is the safest to use? I like the genetic just because it takes less time. The exhaustive will allow you to have a few more options in analysis. The exhaustive optimization will allow you to test the impact of each one of your variables against a strategy. You can't do that with the genetic, so there's an advantage for the standard. Use the best profit of all past, best cluster net profit. What I like to do is come up with a group of optimizations that all are fairly successful and all use somewhat similar to the same inputs. That's kind of the selective optimization thing, but be a little careful in using the best profit, because that can lead to a overcurve fitted pretty easy. Why are there more stable sets of parameters? Simply because you've done a lot more testing on it. How often do you have to optimize? That's going to tell you in the walk forward result. That's going to suggest a reoptimization interval. When I run a test and it passes, does the best test always populate the data? If I have had tests that pass, but others are shown pass with distinction. Frederick, if you run a cluster, you'll have a cluster come up with a grid with all those different numbers on it. You click one of those and then go to the testing. That's the one will be presented across all those data fields. Where can I get this plug-in for TradeStation 9? Actually, Francisco, it should be part of it. If you go to the right side, if you go up and click on View, then Walk Forward Optimizer, it should come up if you got TradeStation 9. Especially if be sure you've kept up with the updates. How often do you reoptimize to figure out when the optimization is no longer valid? Well, Brady, you just about have to kind of observe that and see when it's not looking right for you. If your equity curve doesn't look like you want it, then I go back in and test it again. And that gets to the point where trading is as much of an art as it is a science. With the strategy program in C++, reduce time, probably. But as I said at the start of this thing, I've never had a computer course in my life, and C++ is just a letter and two symbols to me, so I don't know. I know easy language fairly well, but that you get past easy language, I'm a quadriplegic, so. Okay, guys, I think that's going to be about as much as we need to do here. Let's, Michael, let's go ahead and tie a ribbon on this one, and And you guys that are interested in following this up, March 20th is our link. And if you didn't, for some reason, Christine seems to think the sign up is working, but again, if you have a problem, either contact TradeStation or call. I'll give you a number down here too. What is that? 266-8659. That's the Trade the Markets office, and they can help you with the sign up if you need to.
Okay,
thanks, everybody.
thank you very much, John. And hopefully we'll have you on again. Find another equally interesting topic for you to cover for us. Thanks, everybody. Good luck in your trading. We'll see you at another event. Have a good evening.